What's up, guys? Just give me a mic check. Get started in a minute. Please be an actual talking horse. No. Sorry about that. Loud and clear. Cool. Cool. All right, let's test out these Streamlab buttons. Here we go. And a 1, 2. Good. Oh, wow. Look at that. Looking all right. How's everybody doing? Long time. Long time. Good sound. Good sound, good video, I hope. I've upgraded a little bit. Yeah, so not a horse. Sorry about that. So I don't know if everyone here is familiar with why my name is Horse. My original name was Cantor and Clark. It's not because I like horses. Cyrus is single. No. I'm not single. You see this pink mug? You know what this pink mug means? It means I have a wife. That's the way to look at it, man. Air in your lungs, all 4 limbs. Perspective is everything. God is great, man. Absolutely. New follower. Yeah. Happy to have you here, man. 10 out of 10 video quality. Oh, that's great to hear. Yeah. Acted on an impulse over a week ago. So, yeah, super grateful, man. Super grateful to have 2 healthy girls, blue-eyed, blonde hair, great wife. And yeah, the name's Horse because unfortunately my wife has a expensive habit. So we have 3 of those. 3 of those. 2 babies, 3 horses, 1 dog, and 1 cat. I said 3 horses, right? Not 3 babies. I think we're done at 2. So, glad to have everybody. If you're new here, it's nice to meet you. Just gonna catch up for a second. Yeah, I haven't live streamed in a really long time. I'm like the fucking oh man, I am my face is really dry, so regard me. I went to jiu-jitsu today, did a little jiu-jitsu, and just got out of the shower, and I use this soap that's like supposed to kill any kind of bacteria. It's probably not good because you do want some bacteria, like your body is a host. It's a good bacteria and bad bacteria, but after I use it, because I don't want to be wearing someone else's bacteria, dries the shit out of my skin. So no, actually I didn't do the BJJ giveaway, so we'll do the BJJ giveaway today. How about that? We'll do it during this video. Hydrated, not moisturized. Not moisturized. Yeah, that just got away from me. So I think there's been a few cases of things getting away from me the last few weeks. I'm notorious for, by the way, so someone who just said this is the first time they see me stream. I used to stream a lot, right? But I don't get paid to stream, right? So, you know, I have sponsors here and there, and that's awesome, right? Super grateful. But I'm notorious for saying, we're going to stream. Stream next week, 2 days later. Reschedule on the day of the stream. Not really feeling it. So, you know. What colognes do I don't know what colognes I wear. I have shit, I actually have the same 2 bottles from the day I got married because the day before I went and picked them up. I'll look into it. I'll get back to you with that. Let's serious question. How do you manage to have such high testosterone levels? That's a great question, because I was actually just talking about that with a couple of buddies of mine at grappling today. Some of the older guys. So I'm 40 years old, and my T is, I think my T was 1089, and then my free T is 290. And I was talking to some of them, like, hey, some of them are just savages, like in their 50s, and I look at them and I'm like, I want to be just like you. That is my goal my entire life. I've worked out, haven't missed a week, here and there, but been working out since I was a kid. Took creatine well before it became popular. I remember my uncle came back from prison. He spent like 12 years in prison, and he told me about creatine when I was like 13 years old. But I was talking to them because I want to live a healthy, long life. Lifting is super important to me, not only for my physical constitution, but for my mental one. And talking to a couple of the guys, because some of them just look incredible. A lot of them take TRT, of course. There's a little bit of a tell that you could see. And one of the guys, he took HCG or HCH. I don't know what it is. And I was like, hey, man, what were your T levels at? And he was like 300. I was like, holy shit. So I think the reference range is like 300 to 9. And he was like, what are yours? And I was like, well, actually, mine are 1089. Free T is 290. And they were like, holy shit. Do you take anything? I'm like, no, I swear to God, I've never taken anything. I don't even take, I have trouble taking ibuprofen. I don't like to take anything. I don't drink, right? I don't do anything like that. I used to drink a lot. I like to kind of rely on myself. But I'm the kind of person who's like, yeah, I'm sick. Let me just take bone broth and mix it with a bunch of cayenne pepper and eat a clove of garlic. Like, that's just how I am. So I did say that, hey, maybe if I'm in like my 50s and late 50s and 60s, I'll reserve that to put on the afterburners and like maybe take a little bit of TRT. But I definitely don't need it, right? And they were pretty amazed. I do think that so this is something that was left out on Twitter. My testosterone levels were like 950 before this. So this was the most recent panel that I did. So I did a lipid panel, testosterone, vitamin D, all that stuff, full physical, because I only did this because I got a new doctor. And they were 950 previously, and I just wanted to know what the jump was. Wasn't necessarily looking for engagement. I have a lot of doctors that follow me. Having a large following is incredible for many reasons, and a lot of it comes down to like the wisdom of the crowds. Like I have, I've got electricians, I have, engineers, I have doctors that follow me, and people are really helpful. So I go to Twitter like right away with questions. If you ever want to find out the right answer to something, just go on Twitter and say the wrong answer, right? But so I wanted to know what the bump was, because I felt like I wasn't doing anything different. Like I said, work out a lot. Grappling probably does help because environment plays a role. Like men who are in prison, their hormone levels will increase in response to their environment. Obviously, it's a stressful environment. Clearly not in prison. Not stressed whatsoever. But I think it boils down to taking ashwagandha. So ashwagandha is something I was taking just to like light myself up before sleep. That's something once in a while I've struggled with, but then I got the 8 sleep, and the 8 sleep, drops your body temperature, adjusts throughout the night. And I think it might be the ashwagandha, because people are saying that ashwagandha has an effect on testosterone levels. So anyway, I don't want to turn this into a hormone stream. Yes, I'm 40. Madeline's awesome. She's awesome. She's sleeping through the night. We have 2 girls that from the start have basically slept through the night. Yeah. Anyway, so I think we should get into it. So this is my first stream back in a while, and I don't want to just like jump right into the charts and say like, this is what I think, this is the levels that I'm trading. I don't want to go into any kind of like over analysis right now. A lot can happen. I think markets are in a sensitive spot, but I do want to use this stream to reconnect with everybody, to take questions from you guys, make my debut by doing chart requests, doing an AMA, Q&A kind of stuff. Obviously, I have some opinions on the market right now, and we'll get into that. We'll just get these out of the way, and then we'll open it up. And these are going to be consistent moving forward. So I didn't get the new stream set up to not use it. So this will be the first of many streams. Hopefully, I'll start doing we do at least one of these a week, right? I think Friday's a great day, and then maybe we'll be able to boost that, right? Cool. Let's get into it. Let's see if I could change this nicely. Good stuff. Okay. So markets across the board obviously took an absolute whopping beating, and there was really no place to hide over the last, I would say, like the overnight session, Globex session, from yesterday's close, so yesterday's NYSE close, into obviously this morning and currently. And I say that this morning in the stable. So for those of you guys that are not familiar with the stable is where I spend all my time now. Yes, it is a community. I did change my speed up a little bit. I started this community. I started it originally as a workshop and then turned it into a pod. It's extremely mature. It's not, your paid group where it's a bunch of people just fucking saying YOLO all day. There's some serious traders in there, and it's a great group of guys. But I started by saying that it looked like liquidity was pulled out of the market. And one of the reasons is it wasn't just risk that was dumping. It wasn't just, obviously crypto has been really lackluster for a while now. The S&P, the NASDAQ, the Russell, obviously those are down. Tech was down initially a ton. All the small cap shit was, getting flushed. But there was also a significant move in the dollar, in yields, and in gold. And usually when you see kind of an across the board move like that, where dollar, gold, risk, right? Shit that's really far out the risk curve, things that are not, right? Things that are, kind of blue chips, lower beta stuff. Usually when you see that, it's because liquidity is being pulled, right? I don't want to, extrapolate too much from this and say like, it's contagion and they're selling everything to shore up capital, but that is kind of how this extends if it continues, right? If markets continue to shit the bed, right, and we hit, a point where there's some kind of VAR shock, so VAR, value at risk, then you do see things that are like stores of value getting a fucking ass kicking, right? Because someone's looking at their Nvidia in their portfolio and they're looking at their little gold and they're saying, I'm going to free up capital by selling gold, right, to put into the positions I have a little bit more conviction in. So just giving an example of a clear blue chip stock that is, leading by weight for the S&P and the NASDAQ. So this morning there was a brief glint of that, right? Just liquidity getting pulled. Obviously, things have bounced in the ES. So there is a decent response in the ES. So let's just open this up a little bit because I have the scanner open. And so the NAS took a significant level going back to the beginning of October. ES had a significant bounce as well. And I think some of this is clearly, so some of this move is the result of the sort of repricing as connected to, or rather as a result of, don't want to be redundant, said result of twice in the last 5 seconds, the repricing of December rate cuts, right? This is by and large the most unique market that I've ever traded, and I've traded going on 20 years now. This is obviously the most unique market because it's also, connected to that and also often impacting that directly. It is the most unique administration, right? So the White House is like playing with the strings a ton. Donald Trump, right? Paying attention to the feed. So paying attention to your news squawk, it almost is like that's below paying attention to Truth Social, right? A low latency Truth Social feed is like your best friend over the last few months. But there was clearly a case of crowded positioning in equities, right? That's been building up for a while, right? Every other day, bubble, 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 hidden recession, bubble, bubble, bubble. And then you have a market that is, consistently buying. Earnings don't look bad. People are buying, continue to build up in risk because, yes, we're approaching a period where financial conditions are we're going into an easing period, okay? Not direct stimulus like back in the past, right? Stimulus was brought up more recently, $2,000 checks. Bessent ended up walking that back a little bit. Not helicopter money like COVID. It's a somewhat immaterial amount of money, but obviously for the individual, it's kind of immaterial, but across the board, it's significant. But all the data got fucked up over the last few months, and there is a ton of uncertainty in the market. So the market had already priced in a few cuts, right, going into the end of this year. And now the December cut, I think the last time that I checked, like you could use like the CME rate watch calculator. It's a public tool, right? I think the last time I checked, it was like 50% now. So we've taken some air out of this, which, you know, you could look at it a few ways. One, it's a really headline driven market. So we're up a lot, we're down a lot, we're up a lot, we're down a lot, but we're up and to the right. So it's just this wild sine wave that we've been working with in equities. Obviously not in crypto. So that's interesting because obviously these things can reprice pretty quickly. Okay. So there's clearly a positioning issue. The S&P started giving back. I've talked about this in the stable 2 weeks ago now. The S&P started giving back a significant 1 hour trend, basic shit, you know, paying attention to what moving averages, what VWAPs it's been respecting over time. You could throw open a 1 hour chart, throw a 100 period average on that, you know, an SMA, and you'll see that it's just it's a respected period. And there's a lot of trend following in equities. So when the trend shifts, it gets reinforced by people that are looking at that trend, that primary trend, holding the characteristics of that remaining, and then just kind of flipping the switch and flipping positioning as a result. And there's a lot of trend following in equities. And again, it kind of just it's this feedback loop. So we corrected, we traded back up to 69. 69 is an important level for the ES. It's much easier to be an equity bull than a crypto bull right now. That's clear. I'm just going to get all these thoughts out of the way and then we'll get into specifically crypto and questions. It's much easier to be an equity bull than a crypto bull, right? The market in equities is showing signs of stress, but this can persist and melt up for a long time, right? If everyone's calling the top, it's probably not the top. But it is definitely a little bit more stressed out than any other period. We look at TPO charts in the stable. You could look at the shift in daily distributions and how those days transpired from open to close, the types of distributions, how wide they are, how tight they are, and they're way more spread out now. So the market it's trading looser, right? Which usually is just a simple way of indicating that it's less liquid. And if you have illiquidity in your index products and your leading, you know, benchmarks, then it doesn't bode well for anything else that's further out the risk curve, which obviously is crypto. I think though that on the way down, you look at ES right now, it hit its sort of 4 or 5% drawdown off all-time highs, close to 5%, I think. Let's just double check that. So ES for 415 basis points, 4.15, down to 65 region. That's your 100-day moving average. We're in the area where like this kind of pullback is a deeper pullback, but it would be completely normal for this to just recover and continue to push up, right? So I think it's much easier to look at equities, especially look at how, you know, this morning there's been a significant bounce back. If you look at tech, like right away, tech in the S&P, healthcare in the Russell, like overall the stock market right now, like the leading names are seeing capital jam back into it. Some of this obviously is just brief mean reversion trading. But again, like I said, it's easier to be a bull in equities, kind of perma bull, than it is in crypto, right? I would say today, just to touch on a couple thoughts with the market or with respect to crypto specifically, it's I don't think it's a time to, like, let's just look at BTC real quick. I don't think it's a time to play hero, right? Let's blow up this higher time frame chart. This is a market where more than any other, there's a lot more retail, right? There's a lot of retail in this market versus, you know, the next thing might be single name stocks and equities. Way more retail in this market than anything else. The only time where that has changed a lot more recently is a result of the ETF, right? So we have a larger institutional presence in this market. Larger institutional presence, larger, you know, high net worth individual presence at a retail, you know, high net worth can be a retail trader as well. But more than any other, in a market that is dominated by retail traders, right, it's going to be way more emotional. So this is the kind of market where people are super late to react to price. So there has been like some very obvious changes in market structure and in the trend. And you could throw on basic moving averages and accomplish a lot. So this is a 20 period, this is a 50 period, right? And then it doesn't take, you know, a genius to see that we've had a significant break in market structure. When these things happen in this market especially, that you shouldn't continue to bang your head against the wall trying to just lift everything you can, right? Continually trying to long. again, people respond really late in this market, and it often takes much lower prices to get people to act. And that's when you get like these blowouts to the downside. The same thing happens to the upside, right? The trend begins to shift, big ships turn slowly, market begins to pick up some steam, retake some levels, and people are still kind of fighting that the entire way until it crashes to the upside, because suddenly it's like it's clear buy to everybody after it's already 40-50% off the lows. So you could see that, like, if you just keep an eye on Twitter, if you keep an eye on socials, like, the market has just gotten this wrong for a while. I barely pay attention to Twitter at these days, or crypto Twitter. It's amazing just how one-dimensional most people are in this market, like just constantly looking for long, constantly looking to bottom tick. I tell everyone, like, if this market has completely changed over the last year plus, right, since ETF, it trades way more healthy, right? So it trades in a healthier manner. It builds out a lot more. It has a more complete structure. It is, building a base a lot more than it ever has in the past. Usually in the past, it was straight up, leaves an air pocket, straight back down, right? This is a different market at this point. It's also different in the sense that where we are kind of right now and approaching the 80s level, it's the normal threshold for what pullbacks have been in this regime. So post ETF, around 30-33%. So I think that's kind of an area where it might make sense to do some business, but it's going to take a lot now for the market to prove itself as as it being the bull trend is back. The reality is that right now there's not a strong case to be made for really alts, period, right? Or BTC, until it begins to establish some kind of value and begins to base out, right? Until it begins to establish a range, build out structure. And like I said, I mean, it's definitely done that a lot more than it has in the past, enough to where it's not as scary when we have these deeper pullbacks. But still, it's like it's showing you right now that sellers are clearly in control, right? You don't have to look at market structure. For the last few weeks, like every few days in the community, in the stable, we've been pointing out like just really obvious sell programs. It'll be like between 6-8 a.m. and there'll just be a really just sore thumb kind of standout volume on Binance, as an example, or on Coinbase. And it's clear, like, oh, someone is just fucking relentlessly offloading spot, right? There's like a very obvious cadence. It looks like there's a sense of urgency, right? They're either just, there's a sell program. It's like a basic TWAP, but it's like sped up. If they're selling every 3 minutes, every 5 minutes, and it's just size, right? 100 BTC orders hitting the tape, right? And those ended up coming in a couple weeks back, right? Pretty obviously, prices are lower the next week. You saw them come in earlier last week, same thing. Prices are lower the next week. So there's a lot of things working against this market right now. One of them is clearly the 4-year cycle, right? There are people that have a significant amount of capital that believe in it. So in a way, in this market, it's way more retail driven. It's way more technical. There's a component of like the idea that can be self-fulfilling. Okay. One thing I did say is, like, if anything, if this finds a base and doesn't, continue to correct, if we get well past that, what is the finish line for the 4-year cycle, which is right around now, and the market is stable, it's going to become clear to people, like, oh, okay, maybe that wasn't the best decision to offload all of that. But there is something to be said for OGs selling a lot of BTC, and they are overwhelming the tape right now, right? That's clear. They're overwhelming the tape, and your odd lot retail buyers are not able to continue to keep this up. I think there's a lot of things at play right now, like, not to get into the psychology of it, but there's a good debate around BTC being kind of co-opted and picked up by corporates, and they did sell their bags to the institutions, and now Bitcoin isn't the same, right? It doesn't speak to the same ethos that it did previously, and there's an argument that people are rotating into Zcash because of that. I wouldn't read too much into these things. I just, I'd much rather be more focused on price. I think you could be confident in BTC over a 5-year time horizon. It's just uncertain what the next 5 months are going to be like. So it's not, I don't think this is a time to be a hero. I don't think it's a time to like load up the bag. I think it makes sense to be smart with your positioning right now, to let things kind of play out, right? This is still a downtrend in progress. I think you need to see a couple days or a couple weeks of value begin to develop and markets begin to base out. In crypto especially, before you put your hard-earned money at risk, right? Like, the market has to prove itself. I've said this numerous times, like, this market is not trading the same way it did in the past. You're not having like these breakaway trends that just trend for weeks on end. You get maybe a couple weeks of a trend, and then the market consolidates for 2 weeks, right? We look at like, there'll be like 7 days of just the market spending time in the first day's range, right? We've had days where it's like 11 days in a fucking 1,000 point range. Not 1,000 points, but that's an exaggeration. But we've had 11 days where the market is pinned in the first profile or the first day's range before that all began. And this is just the way this market trades now, right? It's not like a breakaway kind of runaway trend. It's way more co-opted by institutional products. They're going to, clamp vol down, going to make this trade differently. The higher it goes, the more likely this is. And, as a point, if vol comes down in crypto, more institutions would be willing to get involved, right? So if we're looking at something that just punches for a couple days and then ranges, we're looking at something that has wide ranges to trade, right? And whether you're trading a 10% range here or a 10% move here, it's not much of a difference. But the EV, so the expected value of looking for this 10% move versus this one, is much different, right? Seeing that the market has rebid levels, right, has put in a base, has again just established some kind of low, right, and then is reclaiming prior structure. There is something to be said for momentum beginning to pile in behind that, and this trade looks a lot more probable than this trade. And mind you, the most important feature of this is that they're for the same window of return, right? So, people get really hung up on like buying as close to the bottom in this market. And the reality is, like, at this point, if we're trading BTC, you should have a really stretched approach to building your longer term positioning in this. Like, you should be looking at this now and saying like, okay, at, days that are 4 or 5% down, I buy this much. We reach this, trough from the high, I buy this much. And that is like a completely separate bucket, and you don't try to master the low time frame, the mid time frame, and the high time frame. It's way too difficult. So yeah, that's that point. Alts wise, just sweeping thoughts on this. I would say that it's clear that there's no like idiosyncratic story for alts right now. Everything you're seeing right now, like I said last week, pissed off a lot of people. Turned out right. It looks kind of like exit scams. Like they look like exit pumps, and it's not hard to create those now because the market is thin the fuck out after that. The move down on the 10th, right, of October 10th. When you break down, you take longs out of the market. You make it less sticky to the upside, right? The concept of markets need to sell off before they can go higher. One of the reasons is because every current long is a future seller. When you have a major liquidation event, those massive mark-to-market losses, people are carried out, they're forced out, they opt out. You make it easier for the market to travel back up. So it takes less effort for this to happen, right? Less aggressors required because there's less stickiness in the book. So it's easier to create these pumps, and there's no sustainability of these pumps though, because there's no real spot demand for any of this shit, right? And I think the longer this market goes on, the more the market becomes privy to that, and then it makes it so that the only things we're trading are things that are brand new, right? With alts, I would say there are some things where I think it just makes sense to almost systematically get involved, or at least have some kind of filter for these opportunities, because they tend to yield a lot. And with alts right now in particular, I would honestly keep an eye on the leaders. So the things that have, captured hearts and minds the most, and the things that have that are sort of the larger caps, the thicker pairs, the more reliable pairs, and look for the next time that they go really oversold on the daily. So a basic tool using an RSI, the next time hype goes really oversold, okay, the next time Solana goes really oversold, right? It's not going to die by going straight down. These things are going to have, let's say we're entering in a longer, more protracted bear market, which in this market is like a year long, right? And by the way, there's plenty of opportunities in the bear market, right? There's plenty of opportunities in the bear market. Let's say that happens. The bounce that hype has, you'll have hype put in like a 50 to 70% bounce, right? I think what you want to do is start setting alerts for the first time that major leaders, so hype is just the example I'm going to be using, the first time that they go oversold. I'd say pump too. Like this is something that people believe in, has revenue. The first time that that goes oversold on the daily, that is a warning shot, right? So you set an alert on that. You set an alert on like RSI below 30 on the daily. The first time it goes below, then it's on your watch list, right? And then you're starting to look for a potential turn. Is momentum cooking off? Every time we attempt to make a new low, are aggressors even showing up, right? Chances are as you go lower, like every subsequent low is going to have less and less selling because you're already getting there by selling on the back of that. So I think you want to do this with alts, but I think right now focusing on alts is really dangerous, right? This market right now is super sensitive. And I think the gig is up until BTC starts really recovering levels. Like Bitcoin is the most important indicator for alts, always will be. ETH temporarily during certain periods, but that's a forced behavior now. Like that's a wish that ETH ends up doing what it used to do, and then alts follow. That's all of this, all of these old patterns and behaviors and sort of flows that took place. These rotations, they're way less reliable now. Bitcoin, this market bifurcated. Bitcoin is in one market. There's some alts that are still following much more closely, and then there's a lot of alts that are just they're on their own. So I think first and foremost for most alts, you need to see that BTC is starting to at least recover the trend, and this could be a little while, right? But needless to say, I think that with alts, so the leaders, so again I'm going to use hype as an example because this thing's going to rip when it happens. I want to know when that thing is oversold, right? When it's getting hammered so much, I just want to know when that's starting so that I could really begin to focus on the turn, because you'll have like a 50% bounce in a single day in hype. You just know it's coming. Every time there's a darling of the cycle, there's going to be a period where it looks like we're so back, right? This is a market that's constantly we're so back, it's so over. And that is like the emotional, those are great markets to trade because those are great participants to take advantage of, right? They buy through the highs, they sell through the lows. Like that's the perfect opportunity for traps nonstop. There are a couple names that definitely do have a more idiosyncratic story to them. Zcash is it's not even a couple. It's like a generic thing to say, right? A couple. It's Zcash, right? I think there's a good case to be made for. I was reading this earlier today. I can't remember where I read it, but it didn't come from me. So just get that out there right away before someone goes like, "I read that in a blog." Naval signal to like the Silicon Valley types. There are people that are buying Zcash right now that are thinking 5 to 10 years. Okay. And I think there's merit to this, right? I do think there's merit to this. I think there's like a forced component to it. And I also think that Zcash is probably a little bit cornered. So me personally, if the possibility of that even exists slightly, I know better now to overthink. I know better at this point in my trading than to let it mix in too much with investing, right? If I know that my area of competence is not investing in crypto. There's been countless times where I've kind of had a feeling about something and I've not put on a position, and it's a regret, right? You're like, fuck, I should have. I could have just bought. Why was I always thinking trading positions, right? Always thinking kind of like X amount of capital behind it, like gotta go big. Just attach it's kind of like you just attach an anchor, right? An anchor, a small position you're comfortable losing, right? But enough that if it fucking 20x's in a year from now, you don't feel like an absolute idiot because you were thinking, so binary, either a ton or nothing. So Zcash is kind of that is Zcash for me right now. Like I'm looking at it, I'm like, okay, maybe I'll just be buying the high by doing this, but I'm going to buy a little bit of Zcash. Like I'll start buying a little bit of Zcash because there's a non-zero chance that these people that are smarter than I am in this domain are right? And I think that there is something to be said for that more than any other time because Bitcoin has been co-opted. And we're going into this it's geopolitically, globally, things have just heated up and they've gotten hotter and hotter. And privacy is not, it should be a right, but it's not at this point. So anyway, I think there's a little bit of there's a strong case to be made for that. it's tough to shake off the prior Zcash cycle behavior, right? But the point I was originally going to get into before focusing on Zcash was, if you have alt setups, because there are, every single week there will be, every week in the stable there's been 1 to 3 trades that have just been, we've mentioned them. There's a lot of other trades that are mentioned that don't work out, but then there's 1 to 3 trades that they've hit. Like Filecoin last week, I actually bagged 30% from Filecoin, which is fucking unheard of. For anyone who knows me, like I'm out, man. 20%, 10%, I'm good. That's huge. You know, that's nothing compared to what people YOLO here, but people also martingale, and people don't know what the fuck they're doing. So they'll ride it all the way. They'll ride their account down to 0. And then yes, they'll catch a 5X, but they'll have approached 0, which is, like, come on. That's not behavior that lasts. Like, that's just playing Russian roulette with, with a larger amount of cylinders in the gun. At some point, that is going to fucking zero you out. But Filecoin ended up moving up 85%. And then there was a great pump long. There's just been, every week, there's at least a couple opportunities. And right now, you just have to be really strict for what you put your money behind, right? And on top of that, I think you have to take profits aggressively. So while BTC, and again, Bitcoin should be like your number one indicator, while Bitcoin has continued to break down and objectively trend lower, objectively it is in a downtrend. So don't listen to your favorite KOL who is like telling you that this is the opportunity of a lifetime constantly. And then like, a couple posts later, they're telling you how they, I've done a lot of observation on Twitter lately because I spend so much time in the stable. It's just comical how fucking terrible people are here, and how just the veil is pulled over most of their followers' faces. People that also like, anyway, so until Bitcoin objectively begins to trend again, you don't have the wind at your back. You just don't, right? And after you have a breakdown like this, one of my favorite sayings is big ships turn slowly. And when they turn, something that's big has a lot of inertia, right? It's not a jet ski, right? This is not a jet ski move. This is a big move. And until Bitcoin recovers, everyone is going to be trading their altcoin with one eye on Bitcoin, right? You're long and alt. If your take profit is 10%, take profit at 5, right? Continue to stack base hits if you get them. Don't romanticize your positions, right? Which is so easy to do with alts because people they're so conditioned to watching other people share their wins, right? That are, huge wins. And then, there's a ton of survivorship there. Remembering how good the past was, and just holding out for too long and then holding on to something, it gives back a ton of ground. They go from green UPNL to very far in the red. So as far as, let me take some questions real quick, and then I'll go into just looking at BTC. So looking at things relative performance to BTC right now, you can see for the most part, this is listed by volume, by the way. And this is a buddy of mine created this platform. If you guys want it. So I'll take questions for a second, and then we'll get to looking at the BTC chart. See if we can glean anything useful from it on the lower time frames. TV giveaway. Yeah. So after this video is posted, leave a comment. Any comment, doesn't have to be a good comment. And then I'm going to use the, what's it called? There's like a comment picker generator. And I'm going to pick 5 people to win the Trading View. I don't know what it is, honestly. Sorry about that. They messaged me, and they said to give away 5 of them to users. So I don't know if it's 1 month free. I don't know if it's a year free. All right, so how to be a father thread. Man, I think most people have it in them naturally. They just have to trust themselves. Yeah, so I'm going to live stream more than once a month for sure. No, my name is not Castillo, dude. All right, let's see. Yeah, I know the music's still on. I'll kill it. Okay. No, my name is Ryan, dude. Okay. Just scrolling through to get to some of the questions. Been a follower for 2 years, first time seeing the stream. Wow, that's impressive that I could be under a rock for that long. The signs were there with how we react to the news. Yeah, news. That's a great point. How the market reacts to good news or bad news is often more important than the news itself, right? It tells you a lot about positioning. So when you have a market that is just listless and there's good news and there's a constant update and beat of good news coming kind of day after day, like what development, who picked up BTC, who's talking confidently about it. Like these things at the end of the day, like they're kind of late, right? Because the positioning is already reflected in it. So when the market no longer responds to this, it's just a sign that the market is already kind of long in anticipation of every good possible thing you can imagine, right? Remember, markets are forward looking. So markets hate uncertainty and they're forward looking. So this is why the one thing that crypto's had going for it is actually that it's never had a really crystallized identity. It can be anything. It could have a new narrative every other week, because once one narrative is kind of used up and doesn't materialize, which a lot of them, that's the case. Once that happens, then we could reinvent a new one. Unfortunately for BTC, like it has a few narratives, and they can kind of play out over short to mid time frames. I think overall, though, the narrative that's going to work with BTC is that it's very young and that there is a significant amount of capital that is starting to get more involved and kind of just step off zero, which would have a big impact in something that is still tiny, especially when you consider the amount of capital that is still on the sideline that might not even need to care about Bitcoin, but because their advisor is telling them that now they've moved from 25 basis point allocation to 1% portfolio allocation, and we just do this and we never take it out, that has a big effect on the positive drift overall. Let's see. How to switch direction quick? I mean, this is something that obviously takes a lot of time to master. Like one thing that I would say is like, find something that you could look at that objectively in sort of a systematic way defines your bias, right? So whether it is mid to longer term VWAPs, right? So VWAPs are, your volume weighted average price. You could think about it as the cost basis for the people that are getting involved. So you could look at it as like where the risk is getting put on and where the risk is averaged about over that time period. So whether we're below them or whether above them, right, kind of speaks volumes, right? It's a volume tool and it speaks volumes. Strong markets trade above VWAP, right? They trade above the average cost basis of participants. When we get stretched from them, usually you have people take profit on both sides. When we're very far away from VWAPs, that's an area where people are very far away from entry and cost basis, and you could expect markets to pull back to VWAP. It's kind of like a fair value level. These are good to define a bias, both for intraday trades, intra-week trades, and higher time frame trades. They give you context. It's not even something that is like defining a bias. It gives you context, right? Who is on side? Who is in better position? Moving averages in markets that are momentum driven, in markets that trend, moving averages are really useful. A moving average, and I described this on a stream that I did for the stable a couple weeks back. The benefit of using even moving averages on the lower time frame, right? So using like a 10-20 moving average on a 5-minute chart if you're an intraday trader. The reason is because price on its own is super noisy. Like 90% of price action is noise. There's a ton of randomness. There's a ton of noise. So if you look at it as, all right, this is very noisy. Any one candle is actually not the honest price. The honest price is probably some mean, right? It's if you use an SMA, it's an arithmetic mean. If you use an EMA, it's weighted more towards the more recent price action. But the moving average, in a sense, is the more honest representation of price versus where price is right now, next 5 minutes from now. Okay, there's a ton of noise. So in a way, moving averages smooth that out. Moving averages on the higher time frame, again, it's just the very concept and super cliche of don't fight the trend, right? There's a good reason why I have been able to stick around and not, completely fuck myself over and hang on to most of the money that I've made each cycle. And just to preface that first, I'm also not someone who, is YOLOing and just killing it every cycle anymore. I don't. I have a trend following approach for the higher time frames, and then I kill it in the mid time frames. Okay. The system that I have for the higher time frames is built on moving averages, right? So longer term moving averages, the 20 and the 50, so 20 EMA and the 50 SMA. I give a lot of respect to market structure because price is the most important indicator, regardless of what people are saying, right? Cam died, so one sec. Let me see if, oh, you know what? Maybe hold on one sec. Let's try this again. Why did the cam die? Let's give that a minute. You guys can still hear me, right? There we go. No idea why that happened. Price is super important. So, for example, like when back in October, right, the beginning of October, when you had that high time frame swing failure, the market broke out of a really important contextual level, and then everyone got really bullish and started talking about 135, 150, but then the market fell back in the range. Okay, that's a huge red flag. Okay, that is a huge red flag. Not fighting these things, not fighting the loss in market structure, not fighting the change in moving averages, not fighting the loss of longer term VWAPs, right? Or when we're beginning to transition. This is really important, okay? Not fighting the tape. So I can't tell you, I can't impose upon you years of experience and how to kind of, dance with the market and be in line with the trend, because that's still really difficult for me, right? I'm right maybe 65% of the time. That is still difficult, okay? I make sure that when I'm wrong, I'm getting the fuck out really quick. And when I'm right, like I'm hoping to capture the meaty portion of the trend. And on the higher time frames, that's been possible by being a more or less a basic trend follower on the higher time frames. There's a lot of things I use in the lower time frames. Obviously, volume is everything to me. So where people are doing business, so I look at volume profiles. I look at, I obviously look at where size is coming in. I pay attention to positioning and open interest. I look at TPO charts. These are all things in a way that help build, that help us build context, right? Supply and demand dynamics in the markets are the most important thing, right? XYZ macro thing is not important unless buyers and sellers are acting upon it, okay? So where aggressors are getting involved, right? Where they've done a lot of business in the past, where they're having less of an effect versus, areas where they've had more of an effect, right? How much they're getting rewarded now compared to how much they've gotten rewarded in the past. These are things that you start to really look into that are extremely valuable. So for example, like what are you talking about? Let's say that over the last couple of weeks, every time 1,000 BTC hits the tape and is lifting the market, just for bullshit, right? Every time 1,000 BTC hits the market, it moves the market, 100 basis points. Okay. We're getting to a point now where it looks like momentum's drying up a little bit, and 1,000 BTC across the tape has only lifted the market 10 basis points, 20 basis points. So the market is now stickier, right? Aggressors are no longer being rewarded. Aggressors are also coming in now, though. They're getting positioned and they're potentially getting stuck. So being able to identify who is getting involved, where they're getting involved, the types of participants in your market, when it's low time frame traders only, when higher time frame traders are getting involved. These are really important things, okay? How to shift with the trend right away, like this is the rub, right? I mean, if I had the perfect answer to this, I'd be in every single move. This is something you build with time. I think the most important thing that you focus on as a new trader is price action. And this is not just, people think price action, they think of just the candles. But we're talking literally where buyers and sellers are getting involved the most, where the market is most responsive, supply and demand dynamics, right? So where buyers are doing volume versus where they're not, right? Where the market is thin versus where it's thick. These are the areas where I think new traders should focus, okay? Focused on, if I had to give it just one, just supply and demand dynamics. Let's see, so audio is so low. You guys can hear me now, right? So I think there's a potential to, I had open mat today. I think there's a potential to bounce into the weekend. So there's a few things worth like, not seasonal, but worth knowing right now. So we are middle of November. Markets are taking a turn. You're probably not going to see people put on a lot of risk. You're probably not going to see crypto benefit into the end of the year. And the reason is like portfolio managers, traders, they get judged on a calendar basis, right? So it makes sense that they would rather lock in right now than risk anything at this point, right? Risking for another, few basis points of upside, or 5 to 10% of upside, even in something that's higher beta, it doesn't make sense right now going into the year end. What makes sense right now, and there's a lot of other effects as well, tax loss harvesting, window dressing, right? Corporate effects. What makes sense now is that gains are being locked in, and you're probably not going to be seeing too much eagerness to get involved. So I wouldn't expect anything really exciting into the year end. I should clarify, exciting doesn't mean the market moving. So I wouldn't expect anything sustainable. You're obviously going to have periods where positioning gets completely offside and it's exciting to trade because, again, this is a market where that happens often, and the futures market ends up swaying things a lot. But as far as like a ton of confidence in this market into the year end, I don't think it makes sense. The significant amount of capital, or the capital that is significant in size enough to push things around, is probably not going to be deploying too much moving forward. It makes sense for that to get cut, to go into the end of the year kind of even keeled, and then to expect that maybe post January 1st there'll be a different set of behavior. So the light package is very just like fly on the wall. The workshop is what most of the time was spent on in the beginning, and then it transitioned to being more of a community and pod. Let's see, just going through them right now. Yeah, I mentioned the giveaway thing earlier. Which camera? This is the Sony ZV-E1, I think. It's a tough call with the S&P. I think that the next area to get involved is kind of local anyway, from a more systematic standpoint. So the 100 period on the daily for the S&P should be kind of reliable. But this is a really, listen, like, I think you just have to know what kind of environment you're in. And this is a really different environment than any other trading environment in the last couple of decades, honestly. It's because of the White House, right? The administration. Like, it is super headline driven. So headline driven, I think the market's just getting totally DDoSed. It's not even going to move anymore at some point. Like, it's just not going to take anything seriously. But it's extremely headline driven. And that's not fun to trade, right? I think it's easy to be bullish on equities over longer time frames for a variety of reasons, okay? But it's tough to make any call. I personally, there are people that come on YouTube and on Twitter all day, and they give these like longer term price projections, and these views that are like multiple jumps and iterations and permutations, and they're creating this big picture of where price is going to be next week, and then a month, and then it's going to go down here, and I'm going to draw a squiggle, and then this is where it's going to bottom, and then that is really fucking dumb. Like, anyone who's been doing this for a living long enough knows that you are better at predicting where price is going to be in the next 5 minutes. You're probably better at predicting where it's going to be in the next 5 years, but it's like anyone's guess, and then in the dead space between, like, I don't know. Like, I honestly don't know. I feel like people don't say I don't know enough. I think that it makes sense to continue to buy the S&P on dips like this. You have to remember, like, one, this is a president that does look at the S&P as a barometer for his performance to some degree. Beginning of the year, he didn't. He was like, I don't even care about the S&P. Okay. Going into midterms, I think this will become more important. The odds increase that with every move down, that we do approach a point where the Fed put becomes a little bit more of a conversation piece. And it doesn't have to mean that the Fed does anything, although we know that Trump's going to be inserting his Fed chair next year. And we know that that's probably going to come with easing. Like we're looking at an easing period at some point. What form that comes in is not for me to debate. I'm not capable of having those kind of macro conversations around the Fed. I just don't, it's not my area of competence. I hate, talking on subjects that I'm not really proficient in just for the sake of conversation, entertainment. But we know that at some point that's likely to arrive. And even if it doesn't, if the S&P is 20% off the all-time highs, the perception is going to be so high that would arrive that the price action is going to reflect that. Like it's an index. It's a survivorship index. It doesn't make sense to be overly bearish on it. Once we're around like 5% now, we could bounce and be at highs in a month from now, right? Every step of the way down, it's more and more difficult to be bearish on the S&P versus something like crypto, by the way, which is super prices everything. In crypto, often price is the fundamentals, right? Higher prices beget higher prices, lower prices beget lower prices, because there's no, with Apple, it's like, holy shit, can you believe Apple's down 20%? Like, this is Apple. Like, this is a company that's going to be around for a long time. This is a company with a legit balance sheet, with revenue, with, it's legitimate. There's a reason why you would buy Apple and say, I'm going to put this away for a rainy day, not look at it for a year, right? You're looking at your phone while you're thinking that. You're surrounded by the product. In crypto, it's so different. It's super momentum driven. It's very difficult for prices to stop moving until we exhaust sellers or big players start to impose themselves on the market. And that is, fortunately in this market, that is kind of an easy thing to start spotting, because you just get some massive size being done and you get blowout type moves. So until you have those blowout moves, you almost very easily can say like it's not over yet, right? And in BTC on October 10th, we didn't have that, right? So, let's see, just catching up to some of the other. Sorry guys, I noticed the chat on Streamlabs is a little bit delayed from the chat on YouTube, so just give me 1 second. Yes, yeah, I agree. The news over the last 3 to 4 months, not specific to today. We're back to the cam point. I don't like to hold positions overnight unless we are in a roaring bull market. It's very difficult for me to hold positions overnight. I've always been this way for like the last couple of years. We need to be trending, objectively trending. And that is something that even then it's not complete certainty, but I just feel I have a shift in confidence when BTC is behaving and stable versus when it's giving back ground. And it's very difficult to hold positions overnight. Spot positioning is a different story. But path determined futures positioning, not for me. And the only reason is, it's not because it's not the only reason, but there are far too many cases in the past where these one-off type of black swan events have happened way more frequently than statistics would imply, right? So every other few months, it feels like we have something happening that should only happen once every 10 years in this market. And the chances are that that I could be in a position overnight and then that exchange has a hiccup. Yeah, I would not want to be exposed to that. For me, there's like a world of uncertainty once I close my eyes, and it's not for me anymore holding positions overnight, unless it's in equities or if it's in spot BTC, or like not just spot BTC. Bitcoin is different than alts. 1 second. Okay. All right, let's take a look at some local levels for BTC first and get rid of some of this stuff. Sorry, 1 second. This new fucking iPhone is weird, man. It like starts answering your phone for you with AI, and then you get like I guess the person answers and says something, and then the phone displays it. I could be talking out my ass, but weird notifications. Get rid of some of this stuff. So a couple things. I think given the change in market structure, so again, deferring a lot of respect to the high time frame chart, wherever this happens, right? This 20 period, so the 20 period moving average, I think this is absolutely now the first touch of this. Again, now it's at 109. I think the first throwback to that, let's say we're continuing to move down and that comes down to 100, that comes down to 103. I think the first throwback to that is probably a good area to buy puts, probably a good area to hedge if you already didn't. Offload if you feel like you missed out on the opportunity to and you want to exit. I think at some point that 20 period test is going to come. I personally, I think I'd probably be buying puts there, right? Buying put spreads, right? Buying, let's say, market trades back up to 105, right? Everyone's, we're so back, right? The trend for me is broken for a bit. Like, again, big ships turn slowly, and when they turn, they don't really change direction that fast back in the opposite direction. The signs have been there, right? The writing has been on the wall for a bit. The BTC is just, it's not, I don't want to say it's not alive, but there's been a lot more interest in selling at any opportunity, okay? And it's still at high prices. Like, everyone is like, can't you believe this? It's still at 100. Can you believe it? And every time I hear that, I'm like, do you have any fucking idea what that means? It means that, like, this thing can continue to go much lower, right? So if we trade back to 108, I think that's not 108, excuse me. The 20 period on the weekly is probably a great area to sell. High time frame wise, I think you want to see this thing build out. Like, you want to see it build a multi-week, multi-month structure even. You don't want to see a zip back up. I think if you have a zip back up, it's very easy to sell straight shots, right? They're very positioning driven. I mean, right now we have a surplus of OI right now into this low. So instead of thinking like, right now there's a bunch of shorts getting in position or it's a bunch of longs buying the dip, don't even focus on that right now. Just understand that regardless, there's a bunch of risk being put on. It started getting put on from above 100. If it's split down the middle, shorts are in better position regardless. If we're trading back above 100, you'll probably put some pressure on them, right? And maybe you'll have a squeeze. But it's anything that happens, because there's so much spot selling, anything that happens is probably just going to be futures driven. And those kind of moves are like aberrations, right? They don't have any real demand behind them. And usually they fold up pretty quick. So in the short term, I think the most important levels, because we broke out of the ones that up until this point were, right, that were actionable. So that was the 110, 100 zone. In the short term, if we have any kind of throwback between, like, I'd say, up to 98, up to 100, I think it's probably a decent sell around that zone on the first touch, right? So throwback to 98, right? The single prints around here, that's the breakdown gap that we had. Throw back up to 100. I think these are good areas because these are areas where I think people will get really emotional, right? Start slamming. And I think there's probably a trap to be found there. This kind of break in market structure, I don't think recovers that fast, right? So if 98, 100 trades on a zip, like if this is very much of a squeeze, and then you start to see this thing lose momentum and there's no follow through by buyers, and especially if, let's say that BTC tracks up to those points. Let's say we track up to 98. I'm gonna draw a squiggle for you guys, even though I hate squiggles. We track up to 98, 100, and volumes are kind of like abysmal, and there's not a ton of spot volume. There's not much volume at all. It's easy to say that this is a move that's driven by less liquidity than anything else. Like, for those of you that are in the stable, you know that the moves down, the easy things to fade are when you have the counter trend moves up on low volume, because it's just a displacement trade. You know that the trade is facilitated by just a little buying, and it's less liquidity that's allowing it to travel that far. So if we trade back up to 98, 100, I think it probably would be a decent sell initially. I think the next area to really focus on is probably this. We'll use this chart instead of the daily. So I'll use the 4-hour. It's probably this kind of 92 LVN. Like, from a technical standpoint, that makes sense. So it's between, like, we'll say, like, we want to include the prior structure, between 92 and 90. right? So I think it would be reasonable for us to have a throwback, maybe throws a little bit higher, trades through 100, and then still sends us lower into the 90s. That is, just from a market structure standpoint, that's an area I think that things might get interesting. And then you start to have maybe this three drive structure. You start to look for sellers to either, there's less liquidations, right? That'd be a good sign. So there's less liquidations on the way down. So you don't see an increasing amount of liquidations into the low. You see a decrease in, interest in selling. So with each subsequent low, there's less people being stopped out, whether it's forced selling or whether it's actual people selling, of their own volition and actually hitting the sell button. That would be a good sign. And into that 92, 90 level, I think that's a spot that could get interesting, right? I think what you want to look for over the next couple of weeks is that base out that ends up more than likely trading back up to 100. Regardless, I think the 100 to wherever that 20 period is, whether that's 104, whether that's 105, I think that regardless will be a sell, because this market is so, we're so back, we're so over. It's so over, we're so back. And the tape, I think the honest tape is still supply heavy, that the first big throwback is going to be a big dead cat bounce. I think it's complete. I think it's a really, I don't want to say 100% certainty, right? It's a mistake as a trader, but I think it's easy to say that something that comes back here in short order is not something to long, right? These are clean ranges. They've been respected. I think that it's likely that we'll continue to carve out longer ranges. And I think that behavior means if we trade back up to 100, it's probably, I don't want to say it's reflexively a sell where I'm just going to instantly sell it, but it'd be the area where I think you should really temper expectations if suddenly you're getting really bullish. Okay. The 92.90 level, that's an LVN. The technical levels, so the market has slowed down right now, which is good, but in a move like this morning, let's say that we approach, we've based out, we're continuing lower, and equities are shitting, gold is shitting again. Technical levels they're irrelevant during times of market stress. So I just want to put this out there, and it's not a call for it at all, but don't trust anyone who has really firm opinions on how low Bitcoin can go. And they're going to hinge their arguments around the idea that, in the last few pullbacks, we've had pullbacks of, around 30, 33%. I said that earlier. That's where you would want to pay attention, right? You're going to start to look for that demand to come back if that's going to remain respected. But the idea that we can't go lower, I think, is really prevalent here. And what I would say is, look at it this way. If this pullback was 30 and this was 30, and these were periods where the market was stronger, wouldn't it make sense that where the market has been the weakest, that we might have the start of the larger pullback, right? So 30% brings us down to the 80s. I don't think you should hinge your financial well-being on 80 being a concrete floor until you see that there's actual buyers stepping in at that level really aggressively, right? Not really aggressively initially. What you want to see is that there's a lot of selling, the level holds, there's less selling, and then aggressors start to lift it off the floor. Stepping in front of it, I think, is dangerous, right? I think stepping in front of it is dangerous because this market it's completely possible for it to trade into the 70s. And I've just seen way too many people say that is just, the idea of that is it's just impossible to happen in in this current regime, post ETF regime. Today, ETF, I think over the last, this is often a good bottom signal when it's at extremes and above norms. ETFs, there's been a ton of selling. So this is one of the largest days, red days, the 13th. And by the way, you can't pay attention to ETF flows on a day-to-day basis. You want to see consistency across days, but any single day you could just be looking at a market maker rebalancing inventory, right? And it depends on how tight the NAV is to the actual ETF, right? So at any point, the market maker might not even need to go hit the market and pick up BTC. Like, you could just be looking at internal flows. Let's see, what else? More questions, guys, by the way. So locally, what I would keep an eye on, like I said, because this does fit the bill of, absolute levels of open interest don't matter as much as relative changes in it. This is a decent pickup in over 10,000 BTC post breakdown through 100. So right above 101. If, again, just instead of thinking this is just shorts offside, just think, all right, I'm going to mark off 101 on my chart. If we start to retrade that and there's no significant response in OI, it might tell you something, right? It might tell you that those, yes, the longs that we're building a position. If you start to trade higher and this starts to be sensitive to that, and we're starting to trade towards 100, 99 plus, and open interest is responding, but maybe it's not responding aggressively right away. If you're back above the point in which this began, and it's not changed at all, there's one side that's offside, right? Because it, could be market makers, right? It was going to be a completely different situation than if it was just buyers, on the open market that weren't maybe delta hedged. But if we're back above where that risk was put on, that's a pay attention level, right? So back above 101, we have 10,000 plus BTC of positioning accumulated down here. On the other side of it, it's easy to make the case for one side being offside. Did I buy alts on this dip? No, I don't believe in alts. I've never believed in alts. So unfortunately for me, that means I'm never going to catch like the 10 banger, right? But at the same time, I'm not someone who's giving back a lot of money every time the market turns. What else? I mean, this is, so just looking at the leaders right now in terms of 24-hour trading volumes, things are definitely tradable right now. So if you look at the ADRs, so this is ATR, but we'll put ADR, so that'd be average daily range. And you look at leaders, right? BTC 4%, ETH 7%, Zcash 20%. So if you're going to be trading something right now, if you're looking to trade alts, I would sort by 24-hour volume. You don't want to be in anything too thin. That might not speak to liquidity, but often there is a correlation. I don't want to be in anything that has a low ADR. So ADR, you want to be relatively high. I don't want to be in anything that is not seeing a significant pickup in volume, right? So relative volume is important. Something with low ADR, something with low RVol is pretty much off the list. But right now, if you're looking to trade alts, I would want to be in the things that are somewhat thick. I wouldn't want to be trying to bottom tick pairs that are, eight-figure market caps, just 9-figure market caps on the low end. I would be careful right now, because a lot of the pumps last week that you saw have completely given back. This market constantly is looking for the turn in alts, and it's a different environment right now. The market has changed drastically, and I think you have to be way more of a picker. That has increased over time. You have to be more of a picker. I think trend followers will always be better off at this point moving forward. So develop some kind of systematic moving average approach to the market. And it doesn't have to be that you trade off moving averages. Like in the stable, what everyone learns is that you could create an awesome filter. So for example, let's create a market breadth filter. So we'll have, so I talk about basic market breadth filter. You start filtering for things that are above their 20 EMA, and then above their 50, you're going to have nothing really. Okay, so what is above their 20? Okay, below price, and then 50 below price. Okay, so these are the pairs that are above their 50 SMA and above their 20 EMA. So again, real quick, just looking at Zcash. So this is the daily chart. Here's Zcash, above its 20, above its 50. Trend is still intact with Zcash, right? It started to blow off here. Okay, so first sign of price action up there. This is something that is, Wick City, but this is still above, right? Stark, this is something that's not been trending, but it's above those moving averages. So the above or below reference is going to show you what is popping off and what isn't. And then to further whittle it down, you're going to have maybe two things on this. What is actually showing with those? What has a crossover? So this will show you what % of the market is actually trending. This is rough, by the way. This is not as good as, a more quantitative method, but we'll put the 20 above the 50. This is filtered for 200 million volume above, and you have only a few pairs that from this standpoint are still trending. But when you zoom in, you would not look at Dash and say this looks like an incredible trend. You would not look at ICP and say this looks like an incredible trend, right? The market structure speaks differently than the actual, crossover trend characteristic. I would, at this point, I only want to be in things that are showing signs of strength, right? So I think I'm just completely, I don't give a shit about alts at all. When you start to see, so just to understand why I'm looking at this, there's 8 pairs out of a universe of let's say 500 alts on Binance. There's 8 of them that are roughly qualifying as trending. And when we zoom in, we already see that, oh, wait a second. A trend tool is going to always be late. So a moving average is always going to be late. When we zoom in, we say, oh, well, okay, this is trending, but market structure in some of these, it's not the case that it looks like it's worth pressing, right? If you have, let's say, this is a good example because this is a multi-month trend. This is something where I would want to keep an eye on if things turn, right? If you have this is, by the way, it's not there yet because we're back underneath it. But if you have a clean trend break and you have, again, signs that the trend is intact and momentum is beginning to pick up, this is something that I want to be able to filter for. But overall, the point of pointing this out right now is to show you that there's really nothing. Looking at this every day can be really useful because overall, what you'll see is that when things begin to improve, and which you do want to happen to be more liberal with positioning, you want to see more broad market strength, and you want to see market breadth improve, right? This is not as useful as looking at, something like FinViz, and you could see, what is it? This is advanced decline is showing you what issues or what stocks on the day are going up versus what are going down. So 55% of stocks in the NYSE, NASDAQ, AMEX are going down. New highs versus new lows on the day, above or below the 50 SMA, right? These are good market breadth tools. This is kind of a jimmy rigged version, but overall, if you're looking at this every day and you start to see we've gone from 8 pairs that fit the bill to 20 to 30 to now you think in percentages, 30% of the market, 50% of the market looks like it's trending again. Okay, maybe it might start pressing the gas pedal, right? A little bit more aggressively. Right now, there's nothing that says that alts are worth even paying attention to, putting a cent in, unless you have some kind of inside information as to who is releasing what soon and what's going to news pump and who's going to pump and dump something. There's no signs of life in alts right now, right? These are very momentum driven, which means prices have to move higher for them to become great. And for prices to move higher in alts, it's often a knock-on effect of BTC finding a low, stabilizing, and itself moving higher, which I think you could bet on it moving lower right now. So no, that's a long-winded way of saying I did not buy alts. This right here, these indicators, this is open interest. This is just to put I should have put the labels on it. Sorry. This is open interest. This is by coins. So this is USDT margin versus coin margin. Coined margin perps tend to be favored by large BTC holders on exchanges. And the reason is it's easy to get flat, right? To get delta neutral without actually having to sell to cash. You'll see that sharp bottoms are often found by these. You have a massive uptick in this positioning, or traps, I should say, not sharp bottoms. But you'll see that these will often, there's good trap setups. You'll have a low put in, you'll have a jamming in of coin margin long, of coin margin shorts, and the market will trade against that, and it'll put in a nice violent low. But this is USDT margin, so stablecoin margin, coin margin. This is funding. This is spot CVD. Something that you guys, I talk about in the stable that you might not be as aware of. Over the last couple of weeks, right? There's been periods where the market has gone down and funding has jacked up, or no, excuse me, the market has gone down. Funding has looked like it was compressing, or people were getting in position in shorts and futures. And it was during the periods where there was really aggressive spot selling. And it was probably the case, because, and I'm mentioning this because let's find one example. So we'll pull up where this is delta volume. This is regular Binance. This is what I want. And then let's blow this chart up. Zoom out. See if we can go far back. I don't know how far we can go. Maybe the 5 minute will allow, but it'll be a little bit clumped now. Shit. Let's see if I can refresh this and get it to work. I mean, you could see the evidence. I just want it to be blown up and more granular. So we'll compress this a little bit. So there's a lot of it back here. Let's see if I could go to the 5 minute. There we go. Okay. So I shared this on Twitter, right? So there are days where there was an obvious sell program that just was hammering the market, right? And a lot of spot selling yielding to the market moving lower, right? And then there'd be a period where the same amount of spot selling was coming through, but the market wasn't rewarding sellers as much. So it looked like there was a temporary low, being put in, or at least the market just ran into more liquidity, right? It ran into more passive buyers. At the same time that's happening, right? Right around here is a good example. Open interest, so back here as well. So back here, you had open interest sharply going up. You had delta on perps going down. At the same time, there was some misleading or misinterpreted signals by people looking at the futures market and seeing a bunch of selling come in and thinking, okay, the spot market has stopped selling and the futures market is selling a lot. And I know that this means, because, XYZ person tells me that we're going to have a squeeze. The market's going to move higher. In regular conditions, market makers they don't have to delta hedge. So if I'm a market maker on XYZ exchange and you lift my bid, and you lift my bid maybe a little bit more than I want, right? I can skew the book so that it looks less favorable for a future seller, right, to hit the book, drop my quotes, drop my bids, because I am now long, right? I don't want you to continue to hit me because I don't want you to run me over. I could skew my bids lower, and then I could pull my offers down. So suddenly I'm giving people the opportunity to lift my offers. I'm making it much more ripe for them to either buy, exit a short, yada, yada, yada. So I could do that. I could skew the book to get myself on sides to make sure that I'm even, right? And clipping tickets this entire time. Sorry, it's my doorbell. My new Apple Watch must be here. So in times of stress, though, when there's a lot of spot selling and it looks like there's an informed seller, right? There's a big seller, right? Maybe someone has color on this. They know there's a massive whale offloading. Market makers don't want to be adversely selected. They want you to be adversely selected, right? So they don't want to deal with informed participants. So they don't want to deal with toxic flow. They don't want to provide bids to someone who's going to run them over. You provide a market maker a bid, you see that they're lowering their quotes. In some cases, there's cannibalistic nature on, there's definitely, this is, employed by certain entities trying to run the market maker over. Instead of doing that, market makers are not going to just skew books. They're going to actually go delta hedge right away. So if I get hit, on bids that I'm providing, instead of trying to skew the book, I will just delta hedge right away by selling perps. Give me 1 second, guys. I have to go sign for something at my front door. Okay. All right. You thought I was joking? That's an Apple delivery. I love Apple. You could get stuff delivered the same day. I bought the new Apple Watch. I had kind of an impulse buy last night. I was like, my wife was like, I want the new Apple Watch because I don't want to look at my phone. And I was like, yeah, I just want to buy something, so I'll buy the new Apple Watch too. So anyway, yeah, so you'll have this misleading feedback from the market when the market is not in a position where it's going to squeeze, and the open interest and selling that you're seeing coming through the futures market is just market makers immediately delta hedging because the flow is unpredictable. They don't want to get hit on the bid and then the market gap down another 10, 50 basis points, 100 basis points, and them to be offside. So what they do is they go into the futures market, they go sell futures to remain delta neutral. They don't have to do this all the time, by the way. So the concept of market makers being delta neutral, it's not imperative that they go sell futures against the market for every single time that they're lifted. So the opposite would be if there was a ton of buying coming into the market and they couldn't skew the books enough to get out of, they couldn't provide orderly offers, right? Bids and offers, and then they would have to go buy futures. And this would create sort of it's like a gamma effect by market makers going and lifting and then helping push the trend up in the case of this being the opposite case, which it isn't. There's no one buying a lot of BTC. So anyway, let's see. Let's get back to this. Yeah, so everything's burning. Don't die. It's a really good advice. Just be really patient. Again, I think a point that I really want to drive home, and it's hopefully one of the more salient points, is that this market, social media right now is not worth paying attention to, right? The most important thing right now is what price is doing. And regardless of what your favorite person is saying, the market has continued to decide to trend lower. And I don't get on Twitter anymore and like ruffle feathers and say shit like this, because I've done it in the past and I've been right and people hate it. And then I've done things like this and then I've been wrong. And then you're like, why did I do that? But I think anyone who's been in the stable for a while now knows that I had a complete change of mindset once we swing failed the high. And there's never been a swing failure in the high time frame where I haven't said, that's bad, I'm going to get hedged, I'll buy back higher, right? I'm always willing to say, like, I don't care if the market rips up from here and is 5% higher, I will buy back. That's the cost of doing business. But the market doesn't often do this unless it's signaling something deeper. And the trend has been very much play level to level. Until things change, they don't change. We broke down from the range. So things did change, and yet people were still like, no, now this is the low. Like, this is, the market is communicating something. And the same people that were late to change when things changed, and it was just abundantly clear to anyone studying flow. I don't want to say studying flow, but if you just look at the tape, it's like fucking selling. There's an overwhelming amount of selling. People don't sell them. Like, people don't like sell things they love, right? That's just it's basic auction market theory, right? So there's an abundance of spot selling, right? Your favorite influencer's telling you that this is the buying opportunity of a lifetime, but the largest people that move the market are saying, I'm getting out. On the contrary, when things improve, people will still be really bearish. So people are getting really bearish right now, and they're probably right in the interim, but they're also deciding to get bearish after the market's down 25%. So just be mindful of this kind of back and forth pull. And I think, so here's my entry into, let's say we go through a 6-month bear market. My attempt will be to buy close to lows, right? I'll probably start getting involved on that. This could, guys, we could be back above 110 and I'll be bullish again, right? If we're back above 110 and we're bid, that's great. I don't care about, the fact that we trade down to 90 and we all got bearish. Like, it made sense to. If we're back above 110, that's a completely different story. The market has proved itself, but make the market prove itself. I will 100%. I've said this for the last, I don't know, I've been in BTC since 2016 or end of 2015. I don't remember the first time. It might have been 2000. It probably beginning of 2016. So and BTC by and large is the best trade of my life. But the truth is, like, I will probably not buy the bottom, but I will definitely get involved my systematic entry into this market that says, regardless of what you feel, you have to buy here. I hope you bought before though, is the 20 period weekly moving average. So the 20 period EMA, you could use a 15 or a 20, right? One might be a little bit sharper, but the 20 period EMA, if we've been trending down, let's just draw a hypothetical, right? And the reason why we're focusing on higher time frame stuff right now is because this is pretty important. If let's say we're into March next year and the market has based out now. We have a sweeping range. We've been trading within a range between, let's say we tap 79, right? And then the range has been up to 95, right? Market's been carving out a big range, okay? In that time, averages are catching up, things are flattening out. If we've done that, and let's say, because I like proof first. I like proof before prediction. So I like getting involved when there's more proof because I think the EV of the trade goes up. So someone will have bought here, but I'm not jealous of them because they'll have to ride that uncertainty. I'm much happier to say like, oh, let me buy the bid of the structure after it's been moving sideways long enough, right? If the range is clean enough, I'll buy the breakout. If we're, ranging this long, and again, we'll just draw this into, it's violent, whatever. We're going into next year and averages are catching up. If we break out of this and we're above the 20, like that's it. I just buy. Like I buy, I close my eyes, I clinch a little bit, and I have a plan to add more if we trade a little bit lower. And I'm willing to be 100% wrong on that situation. But it's often the case that if you move sideways long enough and you've had a ton of selling and the market's absorbed that, the market goes higher to find new sellers. Who knows how long that lasts, but this is a systematic way for me to get involved with longer term positions in BTC. I've used it every cycle since. It's been kind of my, hey, if you didn't already figure this out up to this point, make sure you have a position. Make sure you have all of your position at least. And like I said, I've tried to build positions before that. I buy a little BTC on major splashes. I'll buy based on percent drawdowns from all-time high. But that is like my systematic go-to for you must be in if we are back above, and we're talking weekly time frame, if we're back above this on the weekly. So again, we got some time probably, right? But if this all happens and we're all the way down, we could be all the way down here, by the way. I will not change my tune. BTC could be 50K and we finally have this happen and we're back above that. I'm in. I'm fucking all in. Then you could quote that. All right. What else? Going on. It's kind of a long stream. We'll probably wrap it up. So unfortunately, just a quick view on lower time frame stuff. What we want to see is that every time the market breaks a low, that what you want to start to see is that, oh wow, we broke a low and there's less selling volume. And the reason is, here, let's get to a drawing tool. So with each low break, right, what you want to see is selling decreases. You don't want to see this. We're selling increases, right? The people get more excited to sell lows, that we still run into a place where people are still, they have the firepower to send us lower, right? So we break lows. You get a very, again, there's a lot of selling, guys. Not going to sugarcoat this. Every time we break a low, focus on the selling. You're going to have a couple lows where we do make new lows and the selling just continues to taper off. So it's a combination of there's no more people to stop out, because you'll see that often, like you look at Coinbase, 95K trades by the tick, boom, 30 million drops. And that's because someone had a stop below the level. So when you start to see that taper off, that's a good sign. Okay. You're not interesting sellers anymore because they're either don't have enough to sell or they're just like, I'm not fucking selling down here. And that's a good sign, right? You're actually making a case for less supply hitting the market. And it's not based on some oscillator. It's based on less willingness to sell. Another thing would be focus on the liquidations, right? And we haven't had a significant blowout, but decent amount of liquidations. You get that happening. And then on those subsequent lows, do we liquidate less and less? Okay, that's a good sign. Okay, market's just going to hunt positioning, right? And I doubt it's over right now. So, but I'm winded, man. I'm not winded because I'm a fucking beast, but I am done streaming. I'm very done streaming. I'm cooked, man. After you stream for a while, you just get cooked. I just been talking nonstop. Think about that for an hour and 41 minutes. You know what that turns me into the rest of the day? My brain's like, it's gone from like a gaming PC to like Atari. By the end of the day with my kids, I'm just like beep, boop, beep, boop, beep, boop. 2 brain cells bouncing off each other. Yeah. Cool, guys. Yeah, thanks for tuning in. Every Friday. Yeah, you work on meetings the whole day. That's the worst. There is a major drain, and people only realized that when everyone was doing it during COVID and everyone was on Zooms, because you're processing way too much. You'll feel a huge difference actually if you're on a call with someone and you turn your camera off and you just actually close your eyes and talk. It's real. It's real. I mean, so think about it. I'll leave you guys with something. Every stream, get away from the stream. Your brain is a super small part of your body, and it uses 20% of your, burns 20% of your calories, uses 20% of your energy. It's not as much energy as maybe your legs use, but pound for pound, that's a lot, right? And you're just cooking this entire time when you're talking and streaming. So anyway, TV giveaway, 5 TradingView packages. Let me just double check what those are right now. I'll read you guys what they just sent to me because they just sent it to me 6 hours ago. Let's see. Okay, so they sent me another post I missed. Legendary Black Friday sale. We're giving you, sorry, there's 4, not 5. 4 annual TradingView subs to give away. Yep, 4. That's what they said. They said, yup, 4 in parentheses, as if I was going to be shocked. Every year they do this. You set the rules, you run the show. So there you go. Leave a comment. Make sure you hit the like button. I'm going to use an automated platform to just pick the winners, by the way. So I'll pick the winners. I'll pick the winners tonight. So I won't forget it. I'll pick the winners tonight at 9 p.m. Eastern time. So anyone who is here has a better chance. The rules are you have to just go into the comment section, leave a comment. You could say whatever you want. Hit the like button. And then those 2 things satisfied, enter you into the drawing. And that's that. Cool. And I'll see you guys next Friday. Same time, 2 p.m. Eastern time. Thanks for tuning in, guys. And remember, I should have said this at the beginning, but none of this is financial advice. And next Friday, hopefully we'll have a lot better things to talk about instead of like preparing your ass for more trouble. Most of the stuff that I talk about moving forward is going to be like the latter half where we talk about microstructure, volume dynamics, supply and demand dynamics, and